Hey, what's going on, everyone? Welcome back to Millennial Investments for another daily trade review. In this trade review, we're going to be looking at XELA, that is ticker XELA, Exela Technologies Incorporated. Hopefully, I'm saying that correctly. Ultimately, I wanted to do some tech analysis on it for the simple fact that it broke out so well today. It hit about 550 at its peak. But there's something that's standing out to me that I want to share with you all to pay attention to. We actually have one of our members that brought it to our attention that it broke out. I think they bought around 260 or 290. Can't remember off the top of my head. But they were well positioned. I want to say it was like 260. But, I wanted to also not only do this for them, but for you if you're looking at getting into this trade and basically being aware of what to pay attention to. Now, these 412 levels are key in this trade moving forward, and I want to show you why. If you go back on the weekly here, you'll see that right there, that level was once a level of resistance, and it never played support before. It was just strictly a level of resistance, and it tapped that line multiple times before it broke down, and that's where we saw it almost at the 0.28% levels, even probably lower than that. I can potentially get some precision on that. Not that it matters at this point. About 26 cents. Anyways, so at these levels is something to pay attention to. It's currently trading at 415. If it continues to be rejected at the 423, be cautious. As you can see, it broke above that level here recently. That's where it topped out at 550. Be cautious here that it cannot find the support, as it currently isn't above that 423 and continues moving back down. If it continues moving back down, dependent upon your price average, of course, some people might, give me some backlash on this video. I bought into this at $1 or I bought it at $2, but I'm just telling you what to pay attention to. I know a lot of people might not even want to hear this suggestion, but if you bought at $1 or $2 and you're up to $4 right now, even if you bought at $2, you're up 100%. Split half of your investment right now. Let it retrace. See how it tests that 369 level. If it breaks below that, kill the rest of the position. Allow it to consolidate. From that consolidation point, look for a re-entry around the 272 with the profits you just made, which will be about 50% of the profits that you obtained if you were to wait for the 369 to begin with. But the reason I say that is you can buy this for $1, almost $1, full dollar cheaper, which gives you more buying power. You secured your initial investment. You can put somewhere else and find another opportunity. And you can still recapture gains off of this if it is able to find support above the 272. Even if you were to cut half your position now at 419, you're still buying those positions back in at 50 cents less a share. Now, a lot of people might not agree with me, but I'm all about risk control, risk management, and lowering my risk overall. Now, this only is if we're not able to find support above the 423. And as you can see, it's currently trading back up to the 423 now. Let's see how it retests those levels moving forward, and make sure that those confirmations are in play. And what I would look for is at least like a 30-minute to 1 hour time frame after where it's currently at, above that 423. And if it stays above that, then we're going to retest at least the 520 minimum to the 550, and you can look for another potential exit there. Now, I haven't even went into the fundamentals or any DD that I've collected on the company, or even why I broke out. I'm just strictly looking at technicals and what they're telling me right now and what I want to provide with you. So to bring in my momentum indicators, this is my concern, is that it could potentially bounce off of this EMA, and if it breaks down, we're going back to the 360. If it can't find the support above that 425, that is, or the 423, which is currently at 425, so I'm not saying that it won't, but this is what I'm looking at. You have a gap fill, which lands about the 369, about 12 cents above it. You have an even larger gap fill on the 1 hour, and this can pull back on you just as hard as it went up. And as you can see on our MACD, RSIs showing heavily oversold, showing pullback all the way down to the 15, where it's already currently started to pull back. Now, this is only if we don't find support above the 423. Okay, keep that in mind the entire video if you're watching this. But, I just wanted people to be aware not to hop into this too late, as it's already bounced up, 100, 200%, 100%, depending on where you're at, of course. But just to add some fundamentals, Looking at the company, is doing well quarter over quarter with 69% EPS growth, 70% net profit margins. Let's see. The only thing that kills me is the market cap to common equity ratio, which is negative 0.06. What we like to see in the stocks that we go after are at least +1 and above. And that's actually up, though, over its 5-year average, negative 7.9. So it's actually 6 points up, 6.4 or 6.9 points up, about 6.8. Okay, just to be gracious. But so that's a good sign. It's coming up. But we can also look at the annuals and see that it's down, though, negative 66%, and that's EPS, and then respectively down negative 67% on net profit margin. That's a concern. Same thing with the market cap common equity share. It's about a $211 million company with only 49 million shares float, meaning that it has a high volume rate, meaning it can jump very heavily. So I'm not saying that it's going to come below the 423. Just pay attention to that area if you are placing an entry now, and allow it to keep support above that 423. You can expect this to ultimately go back to the 520s to the 550s, and then potentially break above that, which it has traded above these price points before, which is another thing I pay attention to. And as you can see, that was a previous level of support for the 550, which could play as a stronger level of resistance, which it did today, due to the fact that it was one support. We'd have to get against it, go against it. It could double top and break straight out of that. It can triple top. Watch out for that too. But ultimately, pay attention to the 423. Okay. And anything above that would be in the price range of right around here on the 975. Now, what this company is, I haven't even gotten to it. It's a business process automation company. The company segments include information and transaction processing solutions, healthcare solutions, and legal and loss prevention services. ITPS provides a range of solutions and services designed to aid businesses in information capture, processing, decisioning, and distribution to customers primarily in the financial services, commercial, public sector, and legal industries. HS operates and maintains a consulting and outsourcing business specializing in both the healthcare provider and payer markets. LLPS segment provides a range of support services in connection with class action, bankruptcy, labor, claims adjustment, and employment and other legal matters. Okay, and then lastly, the LLPS segment serves corporate counsel, government attorneys, and law firms. So as you can see, it's currently retesting that 423. Pay attention to that level moving forward. The fundamentals quarter over quarter shows great signs of recovery from the 2020 pandemic. And to note that it's currently trading well above where it was pre-pandemic. So the pandemic actually assisted this with a lot of companies going software-based or SaaS type solutions for their business to deal with the remote operations. But it has some quarterly makeup to do. And investor sentiment really has to come into this business a little bit more. And I haven't even gotten into why it broke out today. So it broke out today because XELA won a $90 million contract for cloud-hosted PCH Global, delivering healthcare solutions for major U.S. insurance. So what it sounds like I want to do personally is I'm going to actually look a little bit more into their investment and relations, and I'm going to see what their plans are for the year moving forward, what market shares they already hold in all of these segments that they have in their business, and how much headroom do they have, how much much more of the market can they capture, and then what are they doing to do so. And then I'm going to keep them to their word moving forward if I were to invest in this at this point. It's currently trading at 449, so you're basically finding that support above the 423. Just make sure if you jump in here at any point above 423 that it doesn't go below and you have a stop loss there. I just wanted to share this with you guys to be safe, not to jump in and start bag holding some of these stocks at high price points, and ultimately to optimize your gains and know what you're paying for. Other than that, if you have any questions or feedback, feel free to leave it in the comments. If you have any videos you want us to review here at Millennial Investments, also leave that in the comments, and be sure to connect with us on all of our social media networks if you're looking forward to having more conversations about trades in real time. So other than that, I want to thank you for watching this video. If you found found any of this information beneficial, simply just show your support by liking the video, show some love, and show some support by liking and subscribing to the channel as well as sharing it with other investors to help us ultimately in building our community. Other than that, I hope you're having a green day, a green week overall due to the markets pulling back. Pay attention to that 10-year, watch the SPY, make sure it continues moving higher, as well as the NASDAQ as well. So other than that, like I said, have a great day. Talk to you guys later. Look for some more reviews coming later. Thank you.